Oscar, we're going to stick with you with story number 5. This is a piece that's actually coming out of the New York Post. I'll read the headline. I'll read you the first couple graphs, and I want you to comment. Headline: a Miami Beach penthouse is poised to sell for more than $120 million and will break an area sales record.
Wow.
By the way, anybody who wants to get some details on that, I'm a price per square foot guy. I run the numbers real quick. Talk about $11,429 a foot. In our newsletter, we took a deep dive into Miami Beach. There'd been 15 sales of north of $4,000 a foot or so in its history. These guys don't want to try to push $11,400 a foot. So just imagine that next time you go into your restroom. So I'll read you the I'll read you the first couple graphs. An oceanfront penthouse in Miami Beach is in contract for a staggering sum of exceeding $120 million. They didn't say if it's US dollars though, Oscar. It could be Canadian. But that being said, if sealed at this price, the deal would shatter previous records and secure its position as the most expensive condominium ever sold in the Miami area, according to the Wall Street Journal. New York posted a rewrite of the Wall Street Journal piece. Story goes on to say the buyer's identity remains unknown. Developers, the Witkoff Group and Monroe Capital did not respond to the journal's request for comment. Serial real estate record breaker Ken Griffin. This is a gentleman from Citadel who moved down to Miami during the pandemic from Chicago. This gentleman's featured in a movie called Dumb Money. I'd encourage everybody to sort of check it out. Right now, he owns a piece of dirt in Miami where he wants to build an office tower. He's bought some historical houses, made a real commitment to this area. So that's Ken Griffin. So the story goes on to say, serial real estate record breaker Ken Griffin, the billionaire hedge fund titan, set the most recent record in Miami in 2015 when he paid $60 million for 2 penthouses at the Argentine developer Alan Faina's Faina House. Griffin has since sold those units for about $46 million. Oscar, what do you make of it? $120 million for a condo that's 10,500 square feet. Granted, it's got a big terrace area in addition to that, but does anything in Miami justify $11,428, $29 a square foot?
So I think that this type of product is really a signal of how Miami has changed. That it's really about what the market will bear. And people like Ken Griffin and others are paying, multi-millions of dollars for properties that they may end up knocking down because they want to build the ultimate mansion that they can flip in a few years if they want for more money. It's an investment. Most of us think of buying a house as the place we're going to live, right? Where our kids are going to be, where we have guests. And the reality is that for many people at that level, at the ultimate level of wealth, it's about an investment. It's about, okay, if I'm going to do this, I'm going to take it to the nth degree. I'm going to make this as luxurious as possible. I'm going to set a standard that's going to be the highest it can be until someone surpasses it. I mean, New York is that kind of city where you have building after building after building that is setting a higher standard for luxury. And you were just saying at the beginning of the podcast that Miami has now surpassed New York in terms of being the financial capital. And
No. I didn't say that. Ken Griffin.
All right.
From Citadel, he made the declaration in season 4 of the podcast.
Yes.
That New York is the have-beens and Miami is where it's going.
So what's interesting is that back in 2000, I remember reporting on lists that would come out every year and say, what cities were the wealthiest people looking at as the best place to put their money, right? And Miami had not yet broken that list, but the prediction was that it would. And now we're at the point where someone like Ken Griffin is saying that we have made it to that point. And he's not just saying that. He's not someone who would just say something like a throwaway line because his credibility is at stake. So him saying it adds a lot of authority and a lot of credibility to Miami as a whole. And there are a lot of family offices that are more aggressive and more active in markets, specifically in Miami. So I think that what's also interesting is that along with that, condominiums in particular are looking for branding that will help them differentiate themselves from other product. And your next story is going to be about that.
Yes.
And I think that what that
What?
tells you.
Well, but Oscar, though, just so we're clear,
Mhm.
you talk about branding. The branding of this project is called the Short Club.
Yes. But the short club in Miami is known as is a known quantity. It's one of the most, elite type of products in the marketplace.
Well, I can tell you what I know of the Short Club. Last time I went in there when it was still operational, they had some problem with their air conditioner. And it was like a musty smell when you
Right.
walked in.
But
It was never cold enough.
Yeah.
The units were small.
Right.
I mean, granted, it's a great piece of dirt. Anybody doesn't know where the dirt is? It's about 20th or so in Collins, just south of the Satai. Just south of the Satai,
Right.
in that near kind of near Carl Collins Park, where some of the museums are and stuff like that.
So the idea is that in markets where the economy is not as strong as it could be, or where there's distress, that's where people like Ken Griffin and others are looking for opportunity, because the short club, whichever location it might be, I mean, that's how Gil Deser and his family made all their money. The same with, other very high profile entrepreneurs in Miami who,
Gil Deser from Sunny Isles fame, who's
Right.
built a variety of different towers. Right now, he's working on a project called the Bentley, where he has his famous Deservator in there, where you drive your car into his Deservator, which is trademarked and patented, and it takes you up to your unit, and you park your car outside your unit.
so I think, like the rest of our culture, American culture, is that people who have a lot of money look for brands that they can trust, that are high quality, that will give them prestige. And our condominium marketplace is exactly the same. And they're looking for properties that are familiar, names that are familiar, that are household names, and they're gonna make them into something we've never seen before, that raises the level of luxury and also of expectation and of exclusivity, right? And I think that's what all these properties represent. And I'll leave it at that, because I know you have another story.
Yeah, I
Perfect.
appreciate that. That's my story. Okay.
Sorry about that. Yeah.
Mr. Fakler, $120 million on a condo in Miami Beach in the 20th and Collins. Is this crazy? Is this the pinnacle of the run up as a result of the pandemic and the free cash and the stock market run? Bitcoin hitting 72,000, or is this actually justified? Is this being built on stand? Or, well, figuratively, literally it is, but figuratively, is it being built on sand, or is there cement and some kind of foundation below $120 million for a condo?
I think really a ceiling's been met as far as the price of condos, the luxury condos. What's happening is that developers are trying to differentiate themselves, separate themselves from their competition. So what they're doing is they are aligning themselves with luxury branded condos.
Yeah, but Mr.
According to the New York
Fakler,
Times.
Mr. Fakler, this project's called the Short Club. Short is somebody who's been around Miami Beach for quite some time. They don't know what the hell the Short Club is. It is a generic name that I don't think anybody would recognize unless you're like an old timer who probably can refer to the Rascal House and Wolfies. But short of that, who the hell knows the Short Club in Miami Beach? You got to be a little long in the tooth to recognize that.
Well, I think it's a complete fantasy.
All
I
right.
mean, it's just how high can you go? And it's just typical of the boom and bust cycles of Florida. This is the same story over and over and over. Everybody's drinking the Kool-Aid. Oh, these are luxurious properties. Everybody's going to come down and pay more than the next guy. And everybody thinks that they got in on a great deal, and the next guy pays more, and the next guy pays more, until the music stops. And the music's going to stop. And when it does, you're going to have a lot of empty buildings and a lot of cranes up there. I'm looking at cranes outside my window, and they're not going to be building anymore. And in fact, we've seen some stories already that some developers are actually shelving plans for new condos because there is a tsunami of condos coming. The supply is going to overwhelm the market. There's only a finite number of people who can pay these multi-million-dollar condos, and we're going to have an epic bust, just like we do every 10, 15, 20 years in Florida. It's the story of Florida. It just seems like it's just like repeat of every cycle that we've gone through since the 1920s.